HDFC, which has seen a big rally through this week, is the one stock which is correcting a bit, so some profit taking on HDFC, Larsen & Toubro, ICICI Bank. So the common theme among stocks declining right now is the ones which have seen a big rally all through this week, and there's a bit of a Friday factor which is playing out, and some of these stocks are seeing some profit taking. We'll take a break now. Up next, we'll track some key earnings, expectations lined up from Divi's Labs and Shree Cement, both nifty stocks. And as always, the buy today, sell tomorrow, of course, in this case, sell on Monday calls from our technical experts. Welcome back. Mitesh Thakkar is back with us for BTST calls. Mitesh, days low on the index. Any index trade to take home, and what would be your stock calls?
No, I think as I said, this looks like the expanding indicators are contracting or just, coming back to the mean. So my sense is that a few days of consolidation would happen. In fact, I would want to buy it in case we get it, closer to about 16,200 or just below that, with a stop below 16,150, 145. And on the stock side, I have one buy call on Gas Authority. That's buy with a stop at 146 for targets of 154.5, and BTST on IOC with a stop at 105 for targets of 108.
All right, Mitesh, thanks very much for that. Those are trades now for potential reversal trades tomorrow. The market is down 65 points. There's still 15 minutes to go as far as closing is concerned. Let's just take a very quick look at what's happening on the large cap space before we move any further, because this is, a step lower, shift lower if you want to call it that, compared to what the market's been doing for the bulk of the day. So this is where the maximum pressure is coming from. Reliance, it's not sold off incrementally. It was down 1.5%, 2%. It's still there, about 2.1% lower on Reliance. But it's just that many more stocks have joined the list of stocks which are lower. So maybe some were lower, but they're down more. Cipla is down almost 4% now. It is at the day's lowest level. Shree Cements is down 2%, a little over 2%. Ultratech is down about 1.7%. There is HDFC Limited, which is down 1.4. HDFC, by the way, is still for the week up 8%. SBI, of course, down 1.5. Axis Bank is down 1.3. And then there is Tata Steel, which is down about 1.25% as well. So this is the nifty picture, which is developing right now with that 66 odd point cut. Lots of numbers which will be coming out, and let's focus on a few important ones. Divi's will be reporting first quarter earnings, but that's tomorrow. Let's get a quick preview going. My colleague Ekta is joining in with exactly that. Ekta, over to you.
Well, for Divi's Labs this quarter, we are expecting a revenue growth of around 15-odd%, EBITDA up around 18-odd%, with margins at around 41% and profit up over 15%. Now remember that the revenue growth is expected to continue, but the growth momentum is likely to be lesser than what we saw in Q4, because in Q4 revenue was up around 29% year-on-year versus estimates of 20%. Now Q4 profit also was up around 29% on a year-on-year basis. Margins, however, are likely to be maintained at around 40% levels. It was around 40.1% in Q4. Now margins are expected to be maintained on the back of backward integration of starting material. Watch out for any kind of positive impact from the supply of COVID-19 related drug Molnupiravir, the API which Divi's Labs is manufacturing, and commentary with regards to COVID-19 related opportunities will be something that the market would watch out for keenly. Remember, stock is already trading at around hefty valuations of 60 times 1 year forward.
Got it. All right, Ekta, thanks a lot for that. So we'll keep an eye out on Divi's Laboratory. Dipan Mehta joins us. Hi, Dipan. Thanks so much for joining in. Wanted your view on this stock, Divi's Laboratory. How would you approach it?
Good afternoon, Nigel, and thanks for having me on your show. I think apart from what she added, all I can say is that the massive capital expenditure programs are going to go on stream. And because of that, you may see a steady improvement in the earnings over the next several quarters or so. Only thing that we need to check with the management is about the erosion in prices, because that's something which has definitely been a concerning aspect in this quarter's earnings season as far as pharmaceutical stocks are concerned. But by and large, I think we should have a solid performance coming from Divi's lab. And maybe if there is some additional information or news flow as far as the COVID opportunity is concerned for the company, then certainly I think the stock will be sustained at these levels and maybe even gradually move up higher. But generally, it's been a stellar performer, and I think this quarter also should be pretty much in line.
Dipan, hi. You've obviously seen what's happening with Tata Chemicals today. How do you think about this one? It's certainly a break higher after almost 3 months or so in this range. It's a sharp break higher, 820 plus. What would you do?
See, I think after many years of underperformance, we are seeing good kind of appreciation coming through companies like Tata Chemicals and other commodity type businesses, purely on account of higher finished good prices which the companies have been able to get. And Tata Chemical, particularly because of its integrated operations, has done particularly well. And some of the overseas subsidiaries also now, I think because of the price points at which the finished products are going at, have turned profitable for the company. So you could have this trend continuing for 2-3 more quarters. But I think end of the day, the entire approach towards lithium-ion batteries and other such new generation technologies is what make get investors excited in Tata Chemicals. They made a few announcements. They are on that strategic growth path. But how far they'll be successful and what scale they can achieve, that needs to be seen. Having said that, I think a lot of the gains as far as commodity price increases, volume increases, largely have been priced in. So I would not venture to buy Tata Chemicals at these levels. But existing portfolios which are sitting on good progress, I think you may enjoy this run for a few more quarters or months as I look at it.
Okay, all right. Investing, investors who are already in, stay in, but fresh investment at this point of time is something Dipan will not advise. So that's about Tata Chemicals, but just pull up Tata Investments before we move into that break. I don't know what's going on here, but that stock, in fact, it's moving higher. It's currently up close to around 10% approximately. I'm just trying to see whether or not they have a large holding in Tata Chemicals. Well, they have only around 5% as per, the disclosure that's out on the stock exchanges. It has around 6% stake in Tata Chemicals. And in fact, that would be valued at around 1,200 crores. The market capitalization of Tata Investments itself is around 6,500 crores. So just keep an eye out on that stock. It's flying away as we speak.
That's an interesting company, Nigel, because it's an investment vehicle of the Tata Group, and it's like it's basically like a fund.
Like a fund, yeah. Because they have shares, they have mutual funds, and I think they also did a buyback maybe in the last 2 years, if my memory serves me right. So interesting company, and suddenly volumes spike up there higher than what they normally do, and the stock is flying away. So just wondering what's going on there. But we'll slip into a short break. You come back, we'll continue our chat with Dipan. We'll also get you some closing trades. Stay with us. Till we move into this weekend, in fact, the markets are trading a little bit lower. Just 4 minutes to go, around 240 seconds approximately. The Nifty is under some pressure. It's down close to around 50 points, but we've had a good week. For the week itself, we're up roughly around 3% or thereabouts. It's been a week of large caps, the mid cap as well as small cap indices. They've underperformed in this week. But we told you about Divi's Laboratory. Another company that comes out with its set of numbers is Shree Cement. That's on Monday. And remember, the stock has been a big outperformer. It commands premium valuations, but they add capacity at the least capex. So, the return ratios as well, far superior in comparison to the rest of the industry. What are the standalone numbers likely to look like? Well, our poll threw up a number of around 3,370 crores in terms of a top line. EBITDA number of around, 1,020. Margins would be around 30.2%. And the net profit number around 600 crores. What are the factors at play? Well, in terms of volumes, on a low base, will jump up by close to around 35 to around 40% odd. Why is that? They've been adding some capacity. Remember, the base quarter is absolutely a one where we had virtually no activity. Though on a sequential basis, there'll be a decline of close to around 17%. Realizations, well, they'll be supported because, Shree Cement has the benefit of the exit prices of Q4. Some of that did hold on for the past quarter, so that's what will help them out. In addition to that, they have no exposure to South India, So they lose in terms of pricing, but they gain in terms of volumes because Shree Cement is mostly in North as well as East India. And their demand has been quite good. Margins will be stable because higher variable cost will be offset by higher realizations. And remember, costs have spiked up, whether it's pet coke, whether it's coal prices or, but Shree Cement, they've been talking about some cost efficiencies as well. So virtually we are working with an EBITDA margin number of around 30.2%. That's stable even on a sequential basis. The key things we'll be looking forward to, demand trend, what are they going to do with the cash that they've raised as well. So we'll wait by for these set of numbers. That's about the expectations. Dipan, after a while, I'm seeing some of these cement companies, the larger ones, that's Shree Cement, UltraTech Cement, both of them under some pressure today. Your view on Shree Cement in particular?
So I think it's a great company, as you said, true value creator amongst the lowest cost cement producer in India. But a lot of these advantages and whatever they have achieved has got priced in. I think if you're an existing shareholder of Shree Cement, you can continue to hold the shares and expect the stock price to move up gradually. But from a fresh investment perspective, I think there are interesting opportunities amongst the smaller cement companies, like say maybe JK Lakshmi Cement or Dalmia Bharat, or even some of the other erstwhile larger companies like ACC and Gujarat Ambuja, which have lost market share, but now I think are back to regaining whatever they have lost through higher capacity expansions which are underway. And I think a lot of the other cement companies are catching up with UltraTech and Shree Cement in terms of efficiencies and in terms of productivity. So from a fresh investment point of view, I find more value in the likes of ACC, Ambuja, JK Lakshmi, Dalmia Bharat, maybe even a Ramco Cement or Birla Corp, rather than UltraTech and Shree Cement, which I think are more or less now priced to perfection, given the valuation at which they are trading at.
All right, Dipan, thanks very much for joining us and running us through what you make of things. We're just sort of wrapping up for the day and done for the week as well. By the way, the market's picked up about 30 points from the lows. We were down 70 and the market will close about 40 points lower. So that is good. What's done well today are names like IndusInd Bank, Adani Ports, IOC, Bharti and Tata Consumer. I mean, that's basically stocks with gains in excess of about 1.5%. What's done poorly is a whole range of names. Reliance, of course, top of the list, 2% down. But then Cipla, Shree Cement, UltraTech, Tata Steel, HCL Tech, Larsen & Toubro, SBI, HDFC, etc., etc. Nigel.
Well, cement had a mixed day actually. You had Ambuja Cements that was under pressure, that was down close to around 3.5%. You had Ramco Cements as well. That as well has trades at peak multiples. Well, that as well was down close to around 2% approximately. What did well though? Vodafone Idea. Well, the hope trade plays out. Hoping for some relaxation to come in. That stock was up 20% from yesterday's low. Well, it was up close to around 60%. Adani Enterprises as well did phenomenally well in today's trading session. And a couple of other names like Pyramid Enterprises in the final hour of trade came out with a set of numbers, and Pyramid Enterprises ended virtually at the high point of the day. What didn't do very well? Well, a couple of these farmer-related names. Strides, well, they have been speaking about US price erosion. Strides was down close to around 6.5% by the time it wound up. Metropolis, big gains in the last year or so. That stock as well, in reaction to its numbers, was down roughly around 4% or thereabouts. But if you go deeper into the markets and you see, which of the stocks that did well, there were quite a few actually. Jindal Stainless, that stock was up roughly around 7.5% odd. You had Gati as well. The management has been talking about scaling up in terms of revenues, margins moving to around 10% odd. That one as well was higher. And in fact, it wasn't such a bad day for cement. If you're looking at Sanghi Industries, at one point of time, not too much interest out there. But from the lows, that stock is up nearly around 3.5 times. So that as well goes home with some hefty gains in today's trading session. So to sum things up, well, the mid-cap index managed to eke out some gains, while the Nifty ended with a cut of around 60 points odd. By the end of the day, the number of stocks advancing was still more than the number of stocks that were declining by close to around 400 stocks. 1,450 stocks advanced and only around 1,000 stocks declined in today's trading session. But on that note, we'll have to wrap up on this edition of Closing Bell. But up next, IPO fever hits D Street. How should you value loss-making IPOs? Well, we'll ask Rahul Arora of Nirmal Bang Institutional Equities in our special offering, Smart Money. On the other side, Rahul and Sonia are waiting for you guys.
Hey folks, welcome to a brand new episode of Smart Money. Now this week, this month, actually this fiscal, it's been all about IPOs. Did you know that 12 firms raised 27,000 crores between April and July of this year? Of course, a large chunk of that came purely from the Zomato IPO. But within that, what we've noticed is that platforms, aggregators, food service companies, burgers, pizzas, fried chicken, lipsticks, you name it, and everything is hitting the lal street. So on Smart Money today, we're going to discuss about these IPOs. What should you buy? What should you avoid? And how to value many of them, because most of them are loss-making. Our expert today and a friend of mine, Rahul Arora of Nirmal Bang Institutional Equities, is joining us. Rahul, thanks so much for being with us on the show. The first question that I've had is that why are so many IPOs hitting the market now? What is so special about this time in the market?
Thanks for having me on, Sonia. So I think the answer lies in your question or in your opening remarks, where you said that just about 12 IPOs have raised the kind of money that they have. It's a mad rush of liquidity, Sonia, and there's no other way to explain it. I think you're seeing what's happening with SPACs in the United States over the last few years, or other months, I should say, more like over the last 15 months. But I think the big point here, Sonia, since you raised Zomato, is I think what the lockdown has done has moved people to digital in a way that was incomprehensible about 18 months back, and the power of that is now giving promoters and first generation entrepreneurs the confidence to come out and list these companies. So you hit the nail on the head. It's liquidity. The market is right. People are moving to digital. As the saying goes, make hay where the sun shines. That's predominantly what's happening on D Street.
Okay, so it's liquidity because of which so many IPOs are hitting the market. But there are a slew of new issues that are coming through, right, Rahul? Why is there so much interest in these issues? I mean, Zomato, for example, loss-making company. No one knows what the future of Zomato could be. We'll, of course, talk about that in greater detail. But first, why is there so much interest in these new issues?
So I think, Sonia, it's the coming of age of the Indian capital markets. It's a new phase. I think if you go back to the turn of the century, in the early 2000s, it was the IT services industry that caught the fancy of investors. Towards the end of the last decade, in the beginning of this decade, it was real estate and a spate of IPOs. And now you're having it at the start of this decade. So I think there's a theme that the market picks up and rolls with it perhaps for some amount of time. But I think the big point here, Sonia, is that